Everybody, it's John. If you didn't notice, we had a slight downdraft this morning. And one of the things, well, let me look at this real quick. We'll look at the VIX here in a second. This is something I like to look at when the markets are kind of selling off. We had just kind of, if you look at the advancers minus decliners, what kind of number you have left. And so we hit a record low today on the New York Stock Exchange and in terms of all U.S. markets. That's the lowest it's been in 2015. That tends to raise a few red flags that, more maybe a miss than meets the eye. The big thing I'm watching is the New York Stock Exchange. We got a clear uptrend here. We're not too far away from this. If it takes that out, this actually, believe it or not, this quiet index has been a really strong leading indicator. We could have trouble. And we do have some potential cycle highs that are coming into play right now, March 6th through the 9th. So just kind of keep that in mind. Those cycle highs are kind of like, when they work, they're amazing. When they don't work, it's like they're crap. But I always pay attention to them, and we were right in the middle of that. So the 6th, and of course, it's the 6th through the 9th, so that means Friday and Monday. All right, so the VIX, you can see right here, has been kind of climbing its way back up. The one danger here to the VIX is that the squeeze triggers to the long side if this explodes higher, and that, of course, would do some nastiness to various stock indexes. So what we really want to look at is just kind of say, all right, this is, kind of the bigger sell-off that we've seen so far in 2015, and is there anything to be concerned about? So if we look at the New York Stock Exchange, back here at the beginning of the year, and it's kind of easy to say, like, once the market's selling off, oh, the sky is falling, the sky is falling, but the only real selling I've seen this year was in the first week of January. Since then, and the New York Stock Exchange has been kind of the weakest index, but since the squeeze triggered, it's all been well and good, right? So that's the New York Stock Exchange, but let's take a look at the S&Ps. From this perspective, this decline has been pretty tame. If we're looking in terms of, this year, of course, it was the first week here of the new year where we had some sustained selling, and then we had kind of a little bit of a redo here, and then since then we had a nice move. This is simply a nice pullback so far to support. Now, we did get a little kicker of volume there, so it opens up the possibility that it may be more. But also remember, and this is kind of my rule of thumb, when you close below the 21, and especially if you get two closes below, I just call it a sell signal. And that just means that in general, it's better to start selling rallies at that point than it is to buy support, because you never know when a close of the 21 will just keep on going versus when it's going to snap back. Okay. And I just kind of, it's one of those things where I know it's like, anytime they're selling, I'm probably a little more cautious than most, but it's only because I can't tell you how through many declines I've been where, the opportunity is there to get aggressive and protect your risk. And, on something like this, when we go from like 1970 to 1840 or so, there's a lot of opportunity here, but if you stick your head in the sand and just stay long hoping for the bounce, it can kind of mess with your head. And not only that, but there's always going to be times, and here's the thing, is we just haven't had this in a while. I mean, the only last real sell-off I remember is in 2011. Wait, I might have passed it. That's 12. There. Is that it? 13, yeah. Yeah, I mean, to me, that's the last real sell-off we've had. It's been a long, time where we went from 1350, note the close below the 21, and then straight here. Now, is that what's shaping up right now? We don't know. I just noticed that uptick in volume, and that got me a little interested. So if we go here, we got that uptick in volume. And again, it may just be a one-day wonder and it's done. So the key, though, to trading this stuff is to be ready for anything and not assume that the trend is going to continue, okay? And it would be different if, we're just seeing a lot of red flags in terms of other asset classes, which we'll take a look at here too. But let's look at the NASDAQ. So the NASDAQ, continues to be super strong. It, in fact, has held its 21-period moving average, okay? So if there's anything that you want to be long, it's going to be the NASDAQ. If we look at the RUT, you can see the RUT, everything else is essentially broken its 21-period moving average. And then, of course, the Dow is essentially leading the way lower. And I'm getting a message here. TradeStation client access layer has encountered a problem. We're sorry for the inconvenience. Okay, so I'm not sure if that means it's going to shut it down. Hold on just a second. Okay, so that was awesome. I had to restart. We're back. Okay, so 55 period moving average here on the Dow. That's a big deal. And on the weekly chart again. So it's one of those things that's like, oh, there's really no need to get alarmed. But what we want to do here is prevent this kind of a pullback and just riding through it blindly down to here. Okay, so that's what I'm looking at. And so what's going on here to me that we just want to pay attention to? First of all, the dollar index just exploding higher. So we had a beautiful trade in this, took profits today, and I would buy pullbacks, but this is good for the stock market. If we look at the euro here, the thing is that here's the thing with markets, is that when things start having big sell-offs, like over 1%, like the euro is, and like the bonds are in other markets, what happens is that there's kind of a panic move and everything gets dumped. And it doesn't make sense. You'd think, well, if the euro is going down, then wouldn't that money go into stocks? Well, it's not that simple. If the euro is going down and people are getting margin calls, a lot of times what they like to do is, instead of nobody wants to put more money in, first of all, and then instead of selling what they're losing, they just actually sell winners. Like, oh my God, let's sell our stocks, put the money in the euro, and that way we can hold on to this position. That's just how the human mind works. And so that's kind of why when everything starts, a couple of asset classes start selling off, then technically everything starts selling off. And I'm showing you the currencies because the currencies essentially are, they're the biggest markets out there. So the British pound falling apart here, and even the Swiss franc. But the real news today in terms of money just flowing out was the bond market. I was not expecting this. Now, so one question here is, is the uptrend from 2014 finally done? Because that's what I've been looking for here. And if we go about here to here, you can see that we actually pierced it. So when I see something like that, that's a big game changer. And what's interesting today too, because the common wisdom would be, well, if money's coming out of bonds, it has to go into stocks. And I would agree with that. And I just think that we're in a situation right now where it's kind of like, wow, bonds are selling off. Let's just sell everything. Money goes into US dollars, maybe, margin calls, whatever. But I've just found that it's interesting when the markets kind of shift like that, you see weird things like this happen. And it is strange. I, for one, am not willing to completely discount the stock market, and no uptrend lines on the stock market have been broken. But just keep in mind, there's some big things going on out there. And the biggest thing I'm looking at is oil rolling over and dying. And if it does, that will take down a good part of the S&P 500 that is dependent on oil. Okay. All right. So let's look at some key stocks. So for Apple, Apple today struggling, but of course it's holding its 21 period moving average, so that's fine. A couple of high flyers though, taking it on the chin. So Netflix giving up the ghost. And again, in my book, if you take out that 21 EMA on a daily, you've opened up the door to more selling. That's could be the official start of some decent selling. So we want to keep that in mind. Amazon, which has been doing really, really well, down $7 today, but it's holding up really, really well in comparison. So if you look at this, if I'm going to buy a stock, I'm going to buy Amazon. That's holding up above its 21 EMA, not something that's falling through it. So Facebook, another one that's holding up really, really well in this environment. Okay. But then what happens is we start looking at, stocks here. Stocks here that have been trying to do pretty good. Okay. And Priceline's another one here too, right? So, overall, everything there looks pretty good. But the question is do we just hold on to them and hope that it all works out? And in my experience, hope and the markets don't work out too hot. So what I did today, and we sent this via text, and I did this in the room, is that for my longs, because the S&Ps broke not only 21 EMA, but broke this snow line level, I went flat all of my longs that were underwater. Okay, now some of them weren't even anywhere near a stop loss, but what I've learned in doing this is it's the importance of hedging. So for today, these are all my closed out positions from today. And these are, we did some of these in the room too, but so Ulta, that ended up being a profitable position, but lost money on the day. I wanted to close out long. The Q puts, I ironically lost money on. I closed out that hedge just before the market started selling off. Priceline had a small trade on, closed that one out. LinkedIn, closed that one out for a loss. I had call credit spreads. It had rallied, hit my stop, and then of course rolled over, so that was nice. JP Morgan and GILD, I'm out. Those things just kind of keep selling off. And what was the other one? Oh, Facebook, and got out. In the meantime, was able to hedge. Close to the dollar futures made money on, but hedged with the S&Ps, hedged with the NASDAQ, and hedged with the Dow. And let me get that. It's my wife. Okay, so, but the idea here is that, you know, even though it's like some of the longs were sucking wind, by sitting there and, you know, just doing like 5 contracts or something like that, just for hedges, you're able to work with that and manage what? The most important thing, your net liquidating value, which is the balance of your account, all right? All right, so we got unusual stuff. Let's go through and look at a couple more things. So first of all, the volume was obviously pretty large. A big volume that came through on the daily charts. And I'm looking at the snow line here, that 207.92, that got chewed through on the spiders. For the diamonds, we've got a big snow line support there at 176.72. So that's about another 200 points down on the Dow. The Qs, which continue to be the strongest, this 109.11 was strong resistance. If this thing really gets going, then you got a tree line in play. But right now, this one's strong. It doesn't have a sell signal, and that's one of the things to keep in mind. All the other indexes do, so that could lead into something bigger. And then finally, IWM. Okay. Now, real quickly, let's go through the key sectors. We got the financials here. They took out the 21. And I'm looking at the daily chart there on the right. Of course, energy. This is going to be tough for the markets to, you know, make new highs if energy is rolling over. Utilities, of course, moving with the bond market. Technology holding up better than many other sectors. And here we got basic materials, of course, kind of leading the way lower. Consumer stocks. So this is what I wanted to show you. This was the big surprise today. This has been a super strong sector. Okay, this has been a sector that's been a leader. This has been the sector that has been essentially holding up the markets. You know, while energy is going down, money is going into XLP. Okay, so now the question is you know, what was getting hit here? Well, Walmart. You know, that's not helping anybody out. Procter & Gamble today down 2%, really taking it on the chin there. Altria Group, this is one that's been pretty strong, getting annihilated. Coca-Cola getting annihilated here. CVS, which has been really, really strong, taking out the 21. So that to me is something of concern, where you have what has been a very, very strong sector getting whacked. Okay, so that's not good. And then XLY holding up a little bit better. That's the Disneys and so on. Then you got the industrials just taking it on the chin, and then finally healthcare even got whacked today. So my concern with today is that this wasn't a normal kind of a pullback. There was a lot of volume in it, and the main thing that we want to be careful of is our own account balance. Okay, so when I look at stuff like this, it can change the nature of the markets, and we're going to prepare for that this weekend. We'll talk about it on Saturday, and then also on Monday with new setups. Okay, so at this point, it's very, very simple. Any individual stock that's above the 21 EMA, I will entertain long positions on. An example would be Facebook. Anything though that's below the 21 EMA, I'm going to be focused on selling rallies. All right.